live. Yeah, freestyle whatever you want. I'm hitting going live. So it says that we are live. We are live. We are live. Live.
Live.
The only word I know is live. I'm waiting to see it actually appear so that I'll believe it. You can't believe it until you actually see it.
I'm going to tune in.
Oh, we are on YouTube. I see your handsome face on YouTube, Koroush.
Oh,
there it is.
I can't see. Nice.
You're there. Oh, you're there. I see your nice Ferrari hat back there.
Oh, thanks, man. Are you into Formula One?
I'm not massively into Formula One because I'm an American and we find it confusing. We do NASCAR, bro. NASCAR.
Yeah, I think I was chatting to Sahil and I asked him about that. And he almost took a slight offense to it. I'm not quite the NASCAR demographic.
I don't think I am either. It's funny, like I grew up in a small town, and so like we were even a step down below NASCAR. We had this thing called Gator Nationals, which is the biggest drag race in the country. So it's like just drag racing, you know, like the parachutes come out the back of the cars to slow them down. Have you ever seen that?
I've only seen that in like South Park and Family Guy. I've never actually seen it in real life.
I grew up in South Park and Family Guy. You might not know that, but that is my actual life, and like in the 80s too. So, all right. So now we're obviously live. We've got some people watching and looking, and it seems like it's actually alive. So I know you're kind of have a bit of a time limit, and I'll yap my face off when we're done. But we're looking at Bitcoin right around 12,000 right now. Kind of a big moment to be back. It's been a massive pain in the ass trying to break this level for months, really, and hold it even when it breaks. So I would love your thoughts. I don't know if you want to just talk. If you want to share your screen, you can go for it, do that, and see what you're looking at on Bitcoin.
Yeah, for sure. Before I do, I think we need to address Adam Tarlowski. He needs to see your whole shirt, Scott. He wants to see what it looks like. Sweet. There you go, Adam. I hope you enjoyed that.
It's here.
Ah, nice.
Do you like, see, I just showed that I did not coordinate my outfit from top to bottom, that I'm just wearing random shorts and like random slides. So nothing matches when I stand up. Yeah,
they only see the top half, so it doesn't matter as much.
Yeah, but I just gave away my my secrets.
All right, let me try and get my screen sharing so I can show these guys some analysis. Because Bitcoin has been very interesting recently. It's been slow and choppy, but clear at the same time.
I agree.
Let's get this in full screen. Nice. Now share screen.
Every time like we try to do something technological, I just like hold my breath and cross my fingers because I figure it's gonna go, it worked. There you are. Amazing.
Nice. All right.
Have at it.
What you can see, people in Scott's live stream, is that I have a lot of lines on this chart. And the lines have been bullish for a little while. Let's dive into why exactly. Let me get my favorite tools up. Here we go, the brush. Now I can draw really bad squiggly lines as I describe why everything is where it is. Let me actually, yeah, there we go. Start with this Fibonacci level, which is quite nice here. Okay, so first thing that has happened, if we zoom back to say, can't get the replay feature up, but over here, you can see that we had quite a sharp fall. We peaked around 12,500. Price went down, went up, went down, went up, went down here. Now, before we had this low, we went low, lower high, lower low, then another, what's the one? Lower high, yes. And then here, this is when things changed. Now, immediately, obviously, I'm not thinking reversal over here. I'm thinking the downtrend has weakened. So the downtrend weakens at that point, and the market starts to look like, oh God, we're about to get some sideways choppy action, or it's just a pause before we go down further. And we had a bit of sideways choppy action over here, a period of low volatility, which in the crypto market, Scott, I know you as well probably absolutely hate because it's very boring as traders. We can't really get in and out of the market easily. Right. Liquidity goes down. It's no fun. And then you can see this key level I've drawn over here. It probably looks nicer on another time frame, but I'm full screen, so I don't want to change in between them too much. It looks better like this. Yeah, so let's take a look at this resistance over here. So this was a key resistance. We had one deviation over here when the price popped above it. And then we broke over here. We broke this level, and that was pretty key. So over here, not only have we set our first low, which isn't lower than the previous low, but the price has now broken a key resistance. So we've seen a slight structural change, and now we're seeing a resistance being broken. Price is starting to look bullish. And before we had this run up over there, let me show you why the Fibonacci level is here. If I get rid of that and draw it again, you can see the move started over here. I'm looking at it from this first low where the structure changed. We take it to the top. And I said it on Twitter a few times, as long as we don't drop below this 382 level, I'm expecting the price to continue going up. And the price has continued to go up. So right now we could even extend this 382 level up to there. And now we have our new floor, which we really need to be watching. And that makes our new key level 11,319. So now that's my key structural level that I'm watching, making sure we don't fall below. And something I like to do is follow with the Fibonacci. So as we make new highs, I'll continue to follow. And that's my structural level. Obviously, we've got other ones which matter, 0.5618, but I'll cross that. Whoa, chair went back. But I'll cross that bridge when I get to it. So 0.5 becomes important once we get to that 382 and we start to see how that's testing, and it's still a key structural level. It shows that the market is bullish. It hasn't retraced more than halfway of what it's gone up. And yeah, those are my general thoughts on BTC. So it's not just me ranting. I'll let Scott talk a bit and then maybe continue sharing some more thoughts.
Sure. Yeah. So you can unshare your screen.
Let's go for pause sharing.
Although it's really pretty.
Oh, thank you.
Pretty screen. It's a very pretty screen.
I've paused the sharing. So I know the live stream's a bit delayed. Can you see it from your end? Can they see?
No, I'm still seeing the normal screen, but I just flipped something. Of course, I have no idea what I'm doing. Oh, stop participant sharing. Stop your participant, and I've stopped your sharing.
Nice.
Let me see what I can find here. I gotta figure out which screen I'm trying to share. Okay, 1 second. Move this thing over here. Let me find a Bitcoin chart. I got a few of them. Okay, well, this was the setup that I was watching for a long time, which was this massive triangle that was sort of forming. And then obviously the smaller local resistance through here. You know, I was looking for a retest of that line, but this is where I was interested in a trade. Similar area you were looking for, like 11,100, but that's not the most interesting chart, I don't think. So I really like the monthly, and something that I've like kind of been beating the drum on for ages. So it's just such a nice, like steady progression. And I know, as you said, we like to see that volatility. We like to see the crazy action, but it's actually been very, very orderly and somewhat predictable, obviously, ever since this insanity down here. But, you know, in my mind, we had this 9,243 level. And if you look, this is the only candle from April of 19 that didn't interact with that level in a meaningful way until we broke high in July. So to me, it was like that break above 9,243 was really, really meaningful. I mean, look at this, like it breaks and support, breaks through, rejected with a wick, rejected with a wick, 2 closes and open right at, rejected with a wick. I mean, it's crazy to see a level that does that. And then obviously for me, once that happened, I kept saying, you know, 10,540, this is the level. You know, we had the 2 candles that both hit it, but this kind of what you were talking about is the structural higher high that finally ended that bearish case, right? And so I've been saying for ages, I want to see that hold. I want to see that hold. And look at the last 3 candles since we broke that, right? One that touched it barely, wick below, and now we're seeing, I mean, obviously this candle's not closed, but a meaningful sort of move above. And then, you know, like if we're like talking about kind of more local trades, I was drilled in on the daily.
Stop, before you move on, could I offer an alternate perspective on that monthly? If I just take the screen again?
Please. 1 second. I got to do something. Stop share. Okay, go ahead.
I'll just share. And maybe our viewers will find interest. So when I see the monthly, one thing I'm looking at, and I want to hear your thoughts on this, is we can take this 10,750 level as somewhat of a resistance. Would you agree with that? We've got a key close over there, a test over there with 2 wicks. Now, what if we're just looking at, and I noticed this on the monthly as you drew it, just the deviation over here. Because right now, all we've done is really consolidate sideways. Most of the move came right over here. Since this big move down from this low at 3,774K level, we peaked at that 12,500. And since then, we haven't really made a big move. Now, this candle, which we're seeing right now, could progress into that. But we can also just go sideways here. And then this whole thing becomes a deviation and we go back into whatever range we have over here.
Definitely possible. I mean, as is anything, of course, when we're looking at Bitcoin charts. You managed to close your own screen sharing. See, we're getting more technologically savvy as we advance. People might not know that, but no, I definitely think that that's a distinct possibility. Although you look at this monthly candle and it looks like it's a somewhat massive bullish engulfing. So if it closes how it is now, I would expect that we see continuation. But I mean, let me see if I can open Zoom again here and share my screen again. Yeah,
I would agree. It does look good, but
I think you always have to be open to it. Yeah, no, yeah, this is still like you sort of said. I don't know if my screen share is working, but this is sideways chop. We're between 2 key levels, right? Yeah. I mean, this is a bearish SFP, really. Or there was clearly a lot of selling liquidity above this 12,003. I mean, you could draw them off all these wicks, so it's not that convincing. But I viewed this as an important level when I saw this happen, right? A clear rejection from a previous swing high. And then, so, I mean, if we're going to do the squiggly line thing, I think you either look for this, right? Like you're saying, or, on the flip side, we want to see, what we really want to see is this. Right. And then we worry about 14,000 when the time comes and, continue on from there. But I don't think it's that convincing either. The other thing that's, I mean, if we're going to be honest, this is not the kind of, by the way, you see this in the stock market too, but volume is dropped to this entire move.
Mm-hmm.
Right. And that's not ideal. There's a lot of arguments to be made for the fact that Bitcoin is largely being sold over the counter and institutions clearly aren't trading on Coinbase. So it's a bit skewed. But and also, I mean, the other argument for the volume issue, which you see in the stock market as well, when you have such an aggressive candle like this, you're just not going to eclipse that volume. Right. This is a black swan event. You're just never going to eclipse that volume. But still, this bounce candle here, bigger, higher. I mean, lower, lower, lower. And this candle's, I mean, unlikely to close above the last one, right? So even though this is a bullish engulfing candle, volume's not really lining up. So I agree with you that it's a time to generally proceed with caution and not go crazy. And 12,000 has been a tough nut to crack. We just saw it be a tough nut to crack as well. Something else worth pointing out, if I can find the right chart, which, just my nature to look for these, and it's not there. So this is an idea, but
And Scott, when you bring up the monthly, are you trading that? Are you trading the monthly, or is that something to form a macro bias for you?
More of macro bias. I mean, I have taken very few trades. I just kind of buy Bitcoin as long as I think the macro trade is bullish, and I don't really worry about it. Right. So, nice. I mean, I was buying it. I started buying at 4,000 in March. I haven't been selling.
Nice.
I just don't see a great reason to. And that's part of also just my appetite for risk, the way that my portfolio is structured and such. But my last leverage longs were at lower prices on more defined moves than what we're seeing now. I did point out those, I think I was pointing out on the daily when we were about to talk before, on this. It just happened to be on the weekend, I think, and I didn't catch it, but I was lining this trade up, literally this exactly right here for for like weeks. You know, I was like,
really
the minute we break this and come back and test it as support, that's where I want to get long. So yeah, but that missed a whole lot of, but I had a long that was here as well. So, but I have not been trading it aggressively by any stretch. But what I'm looking for right now, which is not the case, and it's not confirmed and actually looks like it won't, is a potential bearish divergence here on RSI on the 4 hour. I mean, I don't know if this is my historical one. Oh, it is. Let me see if I can zoom back. There's some crazy lines on here. I never know what chart I'm opening, but like, this isn't it. But there were, I mean, this is not the one, but you can see how sort of effective divs have been on the 4 hour chart at predicting them, you know, like macro tops and bottoms. It's pretty crazy. It's just a great signal. And we are touching overbought on RSI as we speak once again and have a potential bearish divergence. So I would not want to be long if RSI in the next 2 hours or 6 hours closes with a definitive elbow down. I would say that we'll see an RSI reset, kind of like we did here, and see price potentially drop a bit. So I want to see that continue up. That said, it's not a concern at the immediate because it's unconfirmed, and you know, people should always trade on confirmations, not on ideas. Like we always see.
How do you trade the RSI? Because I've actually, some of my earlier systems heavily used RSI. And one of the hardest things about the divergences is like, it's not a divergence until it's a divergence. If it ends up not being a divergence, you just get a higher close on the RSI.
Yeah, I would say for me, I like to wait for the confirmation, which would be like if this, you know, did like close like that, you know, a very clear elbow here. So really, you're waiting almost for like the next one. But if this turns down and closes below and you have a definitive lower high on the oscillator and a definitive higher high, but you would also, I mean, to that end, you also need to see this, right? Like you can't just have this pointing up. So you need them both to be clear peaks or clear valleys if you're looking on the bottom side.
Sure.
And then, you know, on the flip side, like you get the bearish divergence, you could have traded that. You could have shorted this pretty nicely down, you know, a few $100, but then there's a hidden bull div, and actually this one is an old chart, but this would probably be the one you'd be looking at.
Right. So you're not trying to catch the top. Once it drops and the RSI confirms, that's when you look for a short to follow it down or a long to follow it up.
Correct. I mean, unless sometimes it's so defined that for me, it's worth taking the shot. Like the risk reward is there that like, oh, this is going to confirm I'm going to try to catch a top or bottom, but that's something that you do after you've traded thousands of these. and
sure.
You know, and you have to be willing to admit you're wrong the minute it closes wrong. Because like you'll see this is like with 3 minutes left in the candle, this is down, and then like price moves $20 at the candle, and all of a sudden you have this sort of like unconvincing, like exactly what we're seeing right here. Like you would not want to trade it if this ends up flat, right?
Yeah.
Because it could just, the next one curves up, and this is, you know, we're barely below this previous high. So I think, you know, an hour and a half, if this closes above 12,000, that we won't be looking at a div. I think 12,000 has become such an important psychological level for some reason. It's just, you hear people talking about it. You know, I just posted 12K all day on Twitter, which is something I post every time we hit a major level, and it holds for about 30 seconds. So that's what happened here. I mean, how long was this above 12K? Not very long. So
not at all. Not even a 5-minute candle close.
Yeah. Do you have any thoughts on lower time frames on what we can look for? Like, do you think that this move is potentially over? Do you think it could push through?
Yeah, for sure. Let me get the screen share to me again. Give you a little bit of a break as well. Okay, awesome. Cool. Let's move out of the 5-minute. I was just trying to see whether or not we're going to, well, how long we got above. And we did actually get a 5-minute close above the 1200 level, which was quite awesome. Yeah, well, at this point, you're kind of like in one of the worst places to trade. If you haven't already taken your long over here in this zone where you had so much time to take a long or a short, like it's hindsight now. So in hindsight, yeah, it's obvious you should have taken a long, but a lot of people took shorts, and I'm sure they had great reasons for taking shorts. All of this is extremely obvious in hindsight. But where we are now, probability wise, I don't like shorts and I don't like longs. This was the time to make your play. Right now, we've just hit straight into this major resistance at 12K. So we could short and try catch a move down, which is okay on the really low time frames. If you're a scalper trying to catch that super leverage short. But remember, like if you're at that point, you're not following me or Scott and tuning into our live stream to decide your trade. You've already built that system. So if you want to do that, go build a system which will teach you how to trade those sorts of scalps. But if you're more looking for a higher time frame trade than those 4-hour ones, I don't like shorts over here because the market structure, this entire way up, I mean, just look, everything about this looks bullish. And because of this, I don't want to be the guy trying to short over here and predict where the low is and then potentially get caught offside. I also don't want to short in case we smash through 12K, because remember, 12K is this key resistance. It's this key psychological level that when it breaks, it can and probably will break aggressively. So in every instance, a short seems like a terrible idea. For different reasoning, a long is also not the best idea right now. Because where do you put your invalidation point? At what point is your idea invalidated over here? The best argument I would say is, that's just not the best, just one. Say you take a simple Fibonacci level and the 382 is lined up pretty perfectly with this little dip over here. So you could potentially set, let's get long position. So you open your long over here, you set your invalidation over here, but then if the price comes down, take a look at it. Like if the price comes down here, hits your stop and goes back up, that doesn't break the bullish market structure because
at all. Yeah,
that still looks really bullish and really great to me. So I don't really see on the lower time frames an opportunity to do anything but wait until the opportunity comes. And now where I see an opportunity is once we break 12K. So right now, I'm patient. I'm just waiting to see what happens. And then if and when we get above the 12K level, then we can go for the breakout play where you just long as the level breaks and you get your confirmation based on your own systems, or you can try catch the retest, though I don't think it'll be kind enough to give us a clean retest on the 12K level. Too many people are going to be looking for that. That's going to be a crowded trade in my opinion. So yeah, those are my thoughts on the lower time frame, Scott.
Yeah, talking about the idea of the crowded trade, interesting and kind of what you're touching on there. I don't know where you just disappeared to. Just an important note for people that lines are more of zones as I look at them. I talk about it all the time, but like you're going to get front run on most trades. When everyone wants 12,000, it's either 11,700 or 12,100, right? Or 12,050 or something. So just like you said, if you're waiting to trade, a break of 12,000 and then a retest as support, reduce your position size slightly and try to be less perfect with your entry, right? And I mean, that's kind of my approach to trading in general, is to avoid being the guy who misses by $10 or $20 and $30. And how many times have we experienced that in our lives as traders, especially as beginners, either being the last stop loss before price reverses or being the order that misses by a few bucks on the perfect trade?
Yeah, too many people try to be snipers. They're trying to be, what's the name of that famous movie? There's the American guy. He's like a sniper. He did
American
stuff.
American Sniper. Okay. Yeah.
Something like that. Yeah. So everyone's trying to be American Sniper, where they just pinpoint precision, hit absolutely everything. And that level of accuracy does not exist. Technical analysis is not a hard science, not even close. We're just trying to get some sort of idea as to what the price is going to do based on previous data. It's not really looked upon strongly in academia, so it's really hard to get pinpoint accuracy, let alone to the exact dollar. So be humble. Accept that you may have some idea what the price is going to do based on your past data, based on your experience and your discretion, but ladder it out. Like, you don't have to pick one point, like ladder your orders out a bit, incorporate that level of uncertainty into your system. Now, you can also pick individual levels if you are comfortable with occasionally missing entries, because that can be incorporated into your data. So however you backtest it, you can then apply it to your actual data, sorry, your actual trading, but keep it consistent. Personally, I'm a big fan of laddering. With stop losses, I don't ladder though. Stop losses, I keep those pretty much exact. One, because it's nice for implementing it into the system. It's nice for testing. Testing gets awful when you try to ladder those stops, at least with my level of experience with programming these sorts of things. So yeah, besides stops, with take profits and with entries, laddering is always really nice.
Yeah, I agree. And I think that laddering and reducing position size are the two keys to mentally being able to handle those kind of situations. By the way, I know you have to go in a couple minutes. I wanted to ask you, since probably everyone knows, you had COVID, man. How are you feeling?
Oh, thanks, bro. Yeah, it's brutal. I'm telling you, COVID is not the flu. Everyone keeps calling this the flu, but I've never had a flu like that. So what really happened was I haven't been sleeping too well ever since I decided to like double down on Twitter, and I've launched like a few different business ventures at once. So I got to the point where I was getting 5, maybe 4 hours sleep a night pretty consistently. And I then contracted COVID, which I'm pretty sure normally would not have done much to me. But because my immune system was so wrecked from sleep, and everyone listening, well, all 88 people listening right now, sleep is the number one most important thing you can do to improve your life. It will change everything. There's a great book called Why We Sleep by Matthew Walker. Check it out. It can really shorten your lifespan and hurt you in every way imaginable, like physical, mental, everything. But yeah, so that really hurt my immune system. So COVID hit me like a ton of bricks. Crazy fever, entirely lost my sense of taste and smell. That was brutal. I mean, I know I haven't had it as bad as a lot of other people. People have died from it. People have had far worse than me. So this is relative to my own experience. I really don't want to underplay it. I'm blessed to have survived it. But yeah, losing that sense of taste and smell, it's like getting robbed of a sense. It's like going blind, but in a different way, because you lose this dimension you had to life, which you don't have before. You also feel your body deteriorate. Like, I couldn't run, I couldn't work out, I was weak. Yeah, it's on a level, it was pretty bad, and I don't want to bore the listeners. Right now, I'm getting good. I've got about 30 to 50% of my taste back. My lungs are starting to function properly again. Not 100%, but getting there. And my energy levels, that's the best part. My energy levels are back, so I can enjoy life. I can do work and think in my full potential. But yeah, so feeling good, getting stronger. Take it seriously. Try to avoid it to anyone listening.
How long has it been now since you tested positive? A month? About a month?
Yeah, about a month. I can get the exact date up from the message I got from the NHS, but yeah, about a month. Anywhere from 4 to 6 weeks is roughly when how long I've had it now. But like I'm not contagious anymore, because the contagious period is gone. I'm just dealing with the after effects, the after damage, because it causes so much inflammation that it just wrecks your smell buds, if that's even a word, your taste buds, your lungs.
Smell buds.
It's that. Yeah.
Earbuds, smell buds.
So it just, it's that inflammation which you're trying to recover from. So, I'm getting all those fish oils in, the turmeric, everything to try and keep the diet anti-inflammatory.
Man, crazy and scary. I'm glad that you're feeling better. It was weird because I kind of missed that you had it there for a second, and we communicate so often that I'm surprised I missed it. And it's sort of like you were already, I think, on the mend slightly when I realized that it had happened. So I can't imagine doing all that you do with suppressed energy levels, because it's kind of crazy how much you accomplish in a day. I marvel at it. I think we're very similar in a lot of ways. Obviously, we're both podcasting. We both have newsletters. We're both on Twitter. We're both kind of interacting with these
on
communities
as well.
And I know how exhausting and kind of crazy that is to keep up with. And you do even more than me. So I don't know how you sustain that through COVID. I just don't understand. I would have been finger in my mouth, fetal position in the corner trying to deal with my kids or hide from my kids, I guess. So.
Exactly. I was going to say it helps that I don't have a wife and kid to take care of, because in that case, I definitely would not be able to have kept up with that. And heck, you work harder than me relative to the amount of responsibilities you have as well. So
responsibilities.
They're just kids.
They're just kids. They take care of themselves, basically, right? Self-sufficient.
For sure. Sweet.
I know you got to go.
Yeah. Thanks for having me. This was awesome. We're going to do this more often for sure.
Anytime. I like a good whim.
Bye.
Cool, man. Bye-bye.
Oh, and bye, listeners. Enjoy the rest of the stream and watchers, because we're not on a podcast for once. Thanks for having me. And yeah, thanks for the nice comments as well. Yaz Dalili saying, glad you're getting better, Koroush. Really happy for you. Thanks, Yaz. Really appreciate that, man.
Yeah. Later, man. All right, I'm here alone. It's just me. That guy is a legend, by the way, man. You guys should definitely, listen to his podcast, subscribe to his newsletter, follow him on Twitter. He's one of the few people I find is so, I think genuinely concerned for the community, cares about his followers, is not trying to, dump on anyone. He's just a very like-minded individual, someone I was happy to invite on, and, we interact a lot. Off stream, of course. So really good to see that he's getting better. I want to maybe dip back into sharing my screen here, and we'll just kind of see what's going on in the markets in general, because I think there's a lot of interesting things to look at. One thing that's kind of striking me, I don't have the chart pulled up, but let me see. Is that well, I guess we can look at it here. We're seeing on this SPY chart, this is basically tracking the stock market, but we've seen a couple down days on the SPY. You see, I don't have anything drawn on this chart yet. I left it blank, but I guess we're now up today in the afternoon, but that's while we've been seeing, we for a while, yesterday and today, we're seeing the dollar drop and the stock market drop, which is really a rare thing of late. So let's talk about the dollar for now, because I think that the dollar has really become the key for almost everything. It's driving the other markets. When the dollar goes down, we see stocks up, we see Bitcoin up, we see metals up. When the dollar is up, we see all of those things go down. So there's kind of an idea, obviously, that people have had, which I've refuted quite publicly, but that there's a correlation in price action between Bitcoin and the stock market. I think more what we're looking at is an inverse correlation of everything to the dollar. And even, mathematically, we haven't seen the correlation numbers that high between Bitcoin and the stock market. They rose to about 0.58, which is moderately correlated on a scale of -1 to 1, but we're seeing very strong inverse correlation. So what's interesting on the dollar chart is the DXY. It's not the actual dollar, it's a dollar index, but let's look at the monthly. I use a logarithmic chart. And if you've been following me, I've been talking about this literally since the beginning of the year. So this is nothing new, but this is a channel that started in the Great Recession. This is 2008 here, and we really saw it bottom, made a slightly lower high. And then we've seen this channel form for the last decade on the DXY, right? Decade, 10 years. This is not a small move, and it's not going to be a small reaction. Okay. I started talking about this when we saw this clear rejection right under the EQ of the channel. I use the word EQ a lot. You'll hear that in trading. It means the equilibrium. It's the 50% level in a channel. It's the center line, right? So it's a key resistance. It's a key support. When I saw this rejection, I figured we were going to see some serious downside. So of course, this is March. This is when the global economic crisis sort of started with COVID, and we've seen dollar weakness since, which has coincided with a rise in price from the March lows of the stock market and also with Bitcoin. So this is the story. But what we saw here was a clear breakdown in August, right? It split the channel, moved away, and closed way below. Everybody started getting extremely bullish. Not everybody, you can never say that, but a lot of people started getting extremely bullish on the dollar down here, which made absolutely no sense to me. And in September, people were calling for, this crazy dollar reversal. We'd be coming way up here. The dollar was going to show incredible strength. And I said countless times, even when it was up here and had broken through, I said, I bet that we'll close right at this line or below. This is a classic support break and retest as resistance, right? And now what are we seeing in October? A clear move away. And at the moment, we're at the lows of this monthly candle. So if this holds like this, you would expect not a small move away. You would expect real continued dollar weakness, potentially back to the levels at the beginning of this channel. And so that's what I've sort of been looking at and watching. And that means that everything else will largely probably react bullishly if that happens. Why dollar weakness, I guess, is the question. And you have to realize that if we have a government, an administration that wants to see the number go up on stocks, we need a dollar that's diminishing in price, right? So this is what we want. You would think rationally, maybe a government wants their currency to be strong, but it's basically a war to debase the currencies between a number of countries. So you will see them wanting to have the currency go down. Let's drill into the daily, because this is really interesting and something that I've pointed out a number of times, again, while people were getting very bullish when I was saying that we were not likely to see it. So let me pull up RSI, which is interesting on this, but you can see here we have some major bullish divergence with RSI, right, on the daily. And we saw this big pop up and everybody was getting super bullish here. And when we broke this level, it was like people were screaming for higher levels. And I drew this line. So this was a full month ago and we followed it almost exactly. It's exactly what I was seeing when you look at the confluence with the monthly, that we would likely see this rejection here, a drop, another rejection here, and see it coming down. So there's nothing that I see that's so incredibly convincing that makes me bullish on the dollar at all. So I want to look at just for reference, if you want to see how Bitcoin and the dollar move. This is a chart of Bitcoin and DXY, which hopefully my internet will allow to open. Let's see. Well, we got Bitcoin on it. Oh, I forgot. I added the stock market as well, SPX, right? So we could probably move that up. But if you ignore the red line, you got the dollar here. We have very defined peaks and valleys that are opposing, right? Bitcoin's going up, dollar's going down. Bitcoin going down, dollar going up. So that relationship is there. Now we could pull the dollar off of this and compare these. Yeah, I mean, SPY moved up, sure, great, but it's not even close to the volatility that we see with Bitcoin. So yes, we have these general sort of trends, but this is not, to me, correlation at all. The story will remain, if I can get back, being the dollar versus both of these. I mean, you cannot get a more inversely correlated chart visually than the dollar and Bitcoin. I haven't really pulled up an SPY chart, honestly, in ages, which is funny because it's something that I've always traded. So let's just look at it naked and see what we see. All right. I'm going to draw some clear levels. We have the all-time high, I believe, at 358. I'll guarantee that this is the key level because this was the previous high at 339. Rejection, support, down. Not as convincing as I would think, though. Maybe at this point, actually, I would draw something more like this. You want to bias towards more recent price action. So this high could be something, if you want to use candle bodies, this is really interesting. But again, like I just said to Koroush, I don't really care if a line is exact. We want it to be sort of an idea, right? An area, a zone. So this, this area could be a bottom break, but we're basically between these two. And I would expect that we might chop around here for a while, but I don't see anything that is making me extremely crazy bullish on stocks at all. Let's see if we look at it on the weekly. Still not that convincing. I mean, it's so hard to chart an asset after you've had something like this. I mean, look at these gaps. This is crazy. This is the drop in late February and into March. And then to see it come back that hard, of course, we have a V-shaped reversal on the stock market, but not on the economy. And then to see it here, it's just almost, I mean, it's very difficult to chart. I would say we have a clear level here, right? Watch. Right, 319. I don't really love this level, but I'd keep it on here just for the sake of argument. Obviously, I can tell you you need to draw one, at the December 18 lows, something like that. And then, you could draw a level here, you draw a level here, look at this low, there's a level here that supported both of these. It's all about your own bias on how you look at it. But I think it's very difficult right now to figure out what the stock market is likely to do, which is why I just have not really been trading stocks to any great degree. I know someone had asked me to chart gold, so I pulled it up. This is where, right here, I'll show you. If you're following the newsletter, which the link is in the description, this is where we were trading gold. This is our entry. Break of this channel and above. And then since we're looking at the monthly, kind of viewed this area as resistance. It was something like this. So when we got above it and retested, this is where we've been long gold and never really stopped. But I did exit part of the position here at the all-time high to see what would happen. And we're struggling with that previous all-time high again. But I have not looked at this chart in ages, by the way. But let's zoom in, because I can tell you even by looking at the monthly that doing some sort of bullish consolidation. Not a flag, most likely, but let's put the magnet on. That magnet tool, by the way, will save your life. It's amazing. Something like this, right? And then it'll be a descending wedge, not a flag. Could almost be a descending triangle, but I would call it a descending wedge. And now you have this retest. So if you get above here, gold, now that we've kind of successfully retested this resistance, which basically had 3 touches, 1, 2, 3, we should see this continue up. So I would be looking, if I was going to trade this, I'm always exposed to gold, by the way, be fully transparent. I would, do something like this. And I would take, well, that didn't really work out, but I would take it, right around here, something like that. If you didn't get in here, you just want to make sure that you get above this and that this isn't just a deviation from that price action. Somebody asked me here to do silver. So let me, I haven't opened a silver chart in ages either. See what we got. So silver was another just monster trade that I had shared for ages. Again, this is a monthly chart. So this is a downtrend from 2011, right? Boom, boom, boom. We saw it break here and it had formed this trading range in green. The entry that I'd shared in the newsletter back in March was right here, $13 to $14. We're presently at $24. You don't usually make an 80, 70, 80% move on a metal in 6 or 7 months. It's kind of unheard of, if you've ever been trading these things in the past. And then we had another entry that we shared, which was right here, the retest of this EQ again, the center line and up. Now, to be fully transparent, I exited quite a bit of the position at 21, thinking we might find resistance, and we've just kept continued on up. So I literally have not opened this chart probably since July or August. But hell of a trade. Like, this is a massive, we talk about SFPs all the time, right? Swing failure patterns. You hear that term. What does it mean? This is an incredible, incredible, incredible example of an SFP. So we could pull the range off of it, but I'm just going to put a trend line there and make it a color to make it more clear. I hit the wrong button there, but let's make that red or something, right? So this was your previous swing low, right? This was the bottom, like the bottom of this entire move. So not only did we have this descending line and this came down. I mean, this is like right here. This is a God tier trade entry. I wasn't watching it at the time, but that's God tier. I mean, look at that. Look at that retest of that resistance, a resistance going back 9 years as support, right? That's what you're looking for. But the safer one is when you've seen this price action down here, you're going to be terrified when you see this big red, in my case, blue candle. That's the length of this entire thing, right? Terrifying. When you see it bounce and hold above this previous swing low, this is called a swing failure pattern. What does that mean? A swing failure pattern is the idea that a whale, whoever the big players are in the market, are forcing price action into an area where they can engineer liquidity, right? When you're looking at a chart and when you're trading, what you're really looking for is the areas that price is likely to reverse, find resistance, find support. And that's based on the orders, the order book, and what the bigger players in the market are doing, right? So you saw price reverse here, right? So what does that mean? That means that a lot of people who took longs here would put their stop losses here. Stop loss on the long is what? It's a short, right? It's a sell order. So they put them right down here. It's going up. I'm going to put my stop down here, you know, comfortably below this line. This is the support. Also, though, you had a lot of buyers here who are probably waiting and got caught behind. That's why you get a demand zone. But so what these people will do, you know, what you see all the time is that they actually, if they want to fill longs, they want to make sure they have a ton of liquidity for huge orders, they actually sell down into an area where they think that they can find liquidity. This is an area where there was likely liquidity. So they'll sell here to trigger all those sell orders, trigger stop losses. There's a lot of people who are waiting to short when you break support, right? Break support, people are shorting here. Longs are stopping out here. Those are sell orders. So there's tons of liquidity and people selling automatically, right? This is not people even deciding to sell. These are standing orders. You see this wick because they buy up all that liquidity and price rockets the other direction. So this, you didn't have to catch it perfectly. This is where we were catching it, 13.9, something like that. When I saw this close above, I said, listen, whoever was driving the price of silver down, they've filled. They're ready to go. And it was a moon mission from there. So that's a really, really, really good example of a swing failure pattern and what you're looking for. It has to be a really definitive swing low. This is the low. And also you want to see a strong move away. These are the criteria, right? Low, clear. You want to see a big move away. And when price comes back into that low, again, you want to see it on really strong movement, not just like diddling around like this and kind of breaking it. Because this looks like somebody did this on purpose, right? It's engineered liquidity. They're pushing price down to make sure they fill their orders. They don't care that they were selling here to buy here because look where price ends up, right? So they're not trying to catch the dead bottom. They're just trying to find enough liquidity and action for them to fill up. So the silver chart in that perspective is really interesting. I think we can drill into the daily and kind of see what's happening because like I said, I haven't looked at this. I mean, it looks like we have a channel of sorts, right? I guess we could pull it to here. It won't be perfect, but it's more of a channel than we had on the gold chart for sure. You could consider that a slight deviation, but something like this, I mean, it's very bull flaggy on silver. And not only that, so when you look at a channel, there's a few reasons that you would think that the channel is convincing or it might be a good channel. It should also be noted that price tends to fall into channels. You can draw channels on almost any chart and find them. So look, we have top, down, up, down. You would really want to see this stop there. So technically we would have a broadening descending wedge, right? Where the top is correct, but we would technically, be doing something more like this. But we'll call it a channel. It's close enough and it's all semantics anyways. So for a channel, you want to have opposing touches, up, down, up, down. That confirms the channel, right? But then also you want to see the price action around the EQ. I keep talking about this area, but it's so important. And you'll always almost see it. I talk about this all the time, but look, right? Rejection, break, perfect support, perfect. Break, break, back here. Look at that. 2 candles perfectly rejected. Move away, up, and then 3, 4 candles finding support on it and movement away. So I would say I would be bullish on silver here for whoever asked. So now, I could talk my face off about these charts indefinitely. The last one I kind of want to look at is Bitcoin dominance, because this is the story for all coins and it's what's kind of terrifying everyone. Now, if you followed my dominance threads on Twitter, you know that I kind of had this alt season nailed for many months. We kept seeing, a drop, retest as resistance, drop through support, retest as resistance. And I said, we could there's a lot of levels that we had that. So we topped out here, drop, hit, drop, hit, drop, hit, drop, hit, all these more like down here. So like, you know, you could draw this support here, came down, passed it as resistance, or support here, came down, passed as resistance. But all that mattered then was that this formed and we saw it break out. That's the sign that price, in this case, it's not price, but that a chart could be reversing. And it came down and everyone was saying, oh, dominance is dropping. It's great. But I said, no, this is a retest of this resistance as support. And now we're seeing this strong move away. And it's not great for alts. And we're seeing the results of that. Also, what's strange is when you think about it, it's not a great thing for the market in general, because it's an indication that we're still dealing with a sort of this washing machine back and forth between alts and Bitcoin, right? Bitcoin dominance is going up, price is kind of going up, but it doesn't really indicate that there's new money coming to the market. It just kind of feels like people are panic selling their alts into Bitcoin. Bitcoin's rising a little and alts are dropping. But you know, that's just kind of a random musing. I just happened to go out to the weekly. You can see I haven't drawn anything on this, but I can tell you right now that we're in a really key area. Actually, I'm not even going to draw it as a channel. I'm going to pull a box because I think it goes even way further back. So I wouldn't get so panicky about alts now that we've dropped this far, to be quite honest. We could start it here, but let's something like this. Right? This is what we're looking at right now. And I bet this, you know, this also encompasses this wick. Look here, perfect. This bottom, this is a really key area around 61 to 62. So, you know, this is not the time at this moment. Like if Bitcoin dominance starts closing daily, weekly candles above here, we could see a lot more of a main reversal. But right now, this actually looks like a big support break. I mean, look at these. It broke here. This is a terrible attempt to come back and test it as resistance, just absolutely rejected. And now we're back and it's right at the bottom of, you know, where I would potentially draw this level. And I drew the bottom of it because of this wick right here. I mean, we could do, you know, this, like I said, it's just an area. You could draw it like this, and that's even looks worse, but you know, you could draw it all the way down to here. Doesn't really matter. It's the idea. This is the area that we're looking at. So if this gets rejected here and falls down, alts are going to rise. We could be near sort of an alt bottom. So I know it's been disgusting. I mean, anything you're holding is bleeding, but I don't think it's time necessarily to go into a full panic. So from here, guys, I'm going to ask you if you want to throw any questions in the chat, anything like that. I would be happy. I'm going to stop my screen share here and just kind of talk to you guys. If you have any questions, because I'll probably have to go in a little bit. Charting alts today as well. Somebody asked me. I'm actually going to chart a bunch of alts tomorrow. I do a live stream now. I just started it 2 weeks ago. Last week's was a train wreck wrapped in a dumpster fire. I had all kinds of tech issues. I had no idea what I was doing, and I was talking with no chart for like 15 minutes as if there was a chart on the screen. People were like calling my wife to tell her how embarrassing it was for me. Live and learn. I don't know much about YouTube live stream. So asking about charting alts today, I do that at 2 p.m. EST on Wednesdays. I take requests from my newsletter subscribers. So they submit them to me via email on Wednesday because it's too hard for me to do it from the chat. And then I look at the requests and then I write them up in the Thursday newsletter for them so that they kind of have it. The whole idea, like in the newsletter and looking at altcoins and stocks, anything they do, I don't ever want to like offer a signal or tell somebody what they should be trading or how they should be trading it. What I want to do is just show people how I do it so they can incorporate that into their system. Like I would take a position in this area if this happened. And when I share a trade, it's usually, you know, if this line breaks and is retested, I would consider a trade. Do with that what you want. It's never buy this now, FOMO, none of that. So, you know, I share setups, but, you know, half of them the alarm may never go off. They may never even happen. You know, the time might not come, and that's fine. That's what the beauty of setups is. And that's why I don't think you need to trade all day. You can look at a bunch of charts in the morning, set your alarms. The alarm might go off a week later, and then you revisit it and see if it did what you were hoping it would do, and you do or you don't take your trade. So the reason that I do the altcoin charts for subscribers is just so they can get my perspective, because I mean, they're subscribing, they want my perspective. I'm not saying that most people do, but on how I would be viewing the chart if I was looking for a trade at that moment, or if I was already in a position, where would I be potentially looking to exit, or where would my idea be invalidated that I wouldn't want to do it anymore. So Peter Brandt is waiting for $19 to $20 area on silver. Yeah, I don't know, because I don't have the chart open at this exact second. So I'm sorry about that. Philippe said that the dominance hit the 200 EMA and felt resistance. That makes sense. You know, like something about charts in general is, as you dig deeper into other indicators and things, you'll look at something, you start with naked price action and volume. And then when you start adding indicators, you almost always find confluence. If you watch me do these before, these streams, then you've noticed that I'll be like, I bet there's a divergence with RSI, and I open RSI and there it is, right? It's overbought, it's oversold. It's very clear, very, very clear. So, you know, yeah, I'm not surprised that the 200 MA is acting as resistance, because of course there's resistance there, you know, and that's why these things happen. It's just a manifestation of people's trading and people's emotions is what we're seeing on a chart. So here, somebody asked, how important is it for you if alts are below the 150-day MA? That's from Jan or Yan. I don't know how to pronounce it. I'm sorry. I'm assuming Jan. I've literally never heard of someone using the 150-day MA. That doesn't mean it's not important. Just means it's not something that's ever been on my radar that I've used. So for me, it's not important at all, because it's not the way I trade. And that's the thing about indicators and about trading. Everybody has their own line, their own indicator, their own strategy that they like and that's important to them, but not important to anyone else. I've always felt if I'm going to use an EMA or an MA, I want to choose the one that everybody's looking at. Forever, I only looked at EMAs. EMAs are less lagging because they're weighted to the current price, right? More recent candles are weighted more heavily when they're calculated. But then everybody started looking at MAs again. EMAs kind of fell out of favor. They fell out of fashion. So I want to be looking at the lines that everyone else is looking at, so that I can, you know, front run their orders. So I started looking at the 50, the 100, and the 200 again. That doesn't mean those are the ones that are important. You might have noticed that for a few months, all of a sudden the 21 MA became, or EMA became, like the talk of the crypto town. I don't know why. I never had seen the 21 as important. Some people use the 9, 14.3 MA. If it works for you, enjoy. Seriously, it doesn't matter. But to answer your question, there's no line on the chart that's so important to me, because there's no singular indicator that I'm really looking for. So Bobby asked, would it make sense? DXY keeps going down, Bitcoin goes up, and alts bleed more. With the elections around the corner, I doubt the SXP will fall, so DXY will fall further. I mean, that's I don't know where alts will fall into that necessarily. I just did that, but yeah, I would think that we would continue to see more dollar weakness coming into the election, because that fits the narrative of stock prices up historically. Dollar down, everything else up. But listen, there are times when Bitcoin price can rise and dominance can drop. And that's kind of your dream, is when, you know, your alts are doing well, Bitcoin is rising slowly in price. So you're making more Bitcoin, and that Bitcoin is worth more, and you see your portfolio go up in dollars and in Bitcoin. It's kind of that wet dream, right? So I'm just zooming back a little bit, see if everyone's saying alts are dead. Isn't it time to buy? Probably soon. Yeah. It also, but is it time to buy? It might be time to buy for you, but not for someone else, right? Because you might be buying for the next 3 years. They might be buying for the next 3 days and stop out and get destroyed. So when you ask someone a question, you know, it's all about your own time preference, your own portfolio size, your own wealth, your own expectations, your own temperament. Nobody can set a trading strategy for you or decide for you when it's time to buy or sell. I stress that over and over again, which is why I'm saying I don't offer signals. I can't offer signals because I don't know how you trade. I can just show you how I trade. I'm starting to get interested in alts. I see dominance hitting that rejection. I think that we might at least see like a relief bounce soon. But I mean, do I think alts will do well over the next few years? Yes. So if you're buying for the next few years, I could see you investing and averaging into some that you're really passionate about. But like if you're trading it for the next few days or something, there may not be a reason to jump in right now because your idea may be invalidated before they bounce. So it's all about time frame. But yes, if we're talking about sentiment trading in general, it's interesting when the narrative turns so aggressively against something or for something that you can counter trade that. Come to the bottom. Thank you very much. Thank you for buying content. Touched on CBDCs in the newsletter. Pretty interesting. Do you see that having any effect on Bitcoin in the next few years? Tibble, what's up, man? Nice to see you here. One of my favorite people on all of Twitter. Yeah, CBDCs are like my favorite topic, and I can see them being kind of going both ways for Bitcoin. It remains to be seen. I can tell you that there's a few reasons why I think it's bullish for cryptocurrencies. First of all, a central bank digital currency is not a cryptocurrency. It's a digital dollar, right? It will not be deflationary. It will be a tool for central banks to print even more money, right? They're not going to stop printing because it's digital. It will be an easier way for them to track your transactions, know how much taxes you owe. You'll have no more privacy like you do with cash if you're transacting with a digital dollar. All of those things to me are bullish for Bitcoin. Why? Because one of the biggest barriers to entry always to me has been the difficulty of understanding how to use a wallet, how to send a transaction, that panicky feeling you get when you send it and don't know if it's arrived yet, right? Most people just don't know how to send Bitcoin and they get stuck on the first step and they don't care anymore. Well, if we have digital dollars or a central bank digital currency in another country, people are going to get very used to transacting digitally. They're going to understand how to use a wallet. They're going to understand how to type in an address and understand how to send money that way. I think that's bullish for Bitcoin. When they realize that they've lost all their privacy and that they're just getting the same crappy fiat currency in a digital form, I think that will raise more awareness that Bitcoin is a better store of value, that there are cryptocurrencies that will send lightning fast still. And now that they'll be more comfortable transacting digitally, and they may be offended by the privacy and the implications that might drive them towards Bitcoin. Of course, governments could see it as a competitor and make it really, really, really difficult and annoying for people who want to trade Bitcoin. So that the flip side is that it could, they could try to regulate away our ability to get into and out of cryptocurrencies with dollars, things like that. They can't ban Bitcoin. That's a stupid narrative, but they can certainly ban the exchanges that allow you to get in and out of dollars, right? So they can make it very difficult to use and put up enough barriers of entry that it won't work. But I think at this point, the narrative has changed. People have accepted that Bitcoin may not be the best way to transact. Not everyone. There's plenty of people who think it's an amazing, cross-border payment solution, but most people are kind of ascribing to the narrative, I think, of store of value at this point. And so, you can just buy it, put it away and hold it until the world is more sane. And maybe you're not worried about getting in and out of dollars anymore. So I think that narrative about the government's kind of making it more difficult becomes a little less impactful as you realize that maybe you just want to hold Bitcoin as your bank account, right? It's your savings account. So I think it's going to be really interesting to see what happens with central bank digital currencies. I mean, China just airdropped millions of dollars on one region, to test it out. We're seeing central banks all over the world. It's the future. It's happening. They're not going to be printing coins in 10 years, right? I mean, just the notion is absurd, stupid. So everything will go digital, but that doesn't mean that they'll become cryptocurrencies, and they could become competitors for our very beloved coins here. So just looking back a little bit, anyone else have any more questions or thoughts, please let me know. Otherwise, I'm going to sign off shortly. You'll see in the description, by the way, where you can join the newsletter if you want to be a part of what we're doing. I send that out 2 times a week minimum. Sometimes I get a whim, something I'm really want to talk about, and I'll send it out more. It's $15 a month, and it's basically everything that I can't share in long form on Twitter. Yeah, I mean, that's really the gist of it. I'm scrolling down here. What is the role of central banks in a Bitcoin-centric world? Well, it's not a Bitcoin-centric world, unfortunately, and I don't think that it will ever be a Bitcoin-centric world. I mean, the role of the central bank is to regulate the money supply, control inflation, deflation, which they only have limited tools to be able to do. So, we shouldn't need central banks in a Bitcoin-centric world. That's kind of the point. We eliminate the centralized authorities. You let the market drive price and demand and supply. But I really don't believe that we ever get to that place where Bitcoin is the global reserve currency. And I don't think we have to. I think it's just like, it's wishful thinking. Bitcoin can have a place for everyone, and certainly for people who have been smart enough to buy it and hold it and be passionate about it without it having to destroy the dollar. The dollar doesn't have to die for Bitcoin to be valuable. There's a world for both. In fact, it's important, and something I said not long ago on Twitter, it might be an unpopular opinion, but I think that people should have both dollars and Bitcoin, right? You should not be getting rid of all of your dollars just to get Bitcoin. And why is that? Historically, the people who have become the wealthiest have been the ones who have cash during a depression, during a deflationary environment, right? We talk about inflation, hyperinflation, the power of Bitcoin. It's a deflationary currency, but governments don't mind a little bit of inflation. They're terrified of deflation, because deflation is when people lose their jobs, the price of real estate, everything crashes, the price of everything comes down, and all of a sudden you have this full reset, which is the last thing that they want. But if you have cash on the sidelines in a depression or deflationary environment, you buy everything for pennies on the dollar, right? Some of the wealthiest people I know are the ones who had cash on the sidelines in 2008 and were buying up real estate in South Florida for penny on the dollars, literally flipping it for millions of dollars profit within a year. So you want to have both cash and dollar offhand. You just have to understand that your dollars are not going to make you any money. You can't put dollars in a savings account. You can't save them anymore like you used to, because their buying power is decreasing by the day, not increasing. Hayden, I did not chart BQX today. I'll throw that up in a second for you, actually. How would a Bitcoin-centric world handle the economic crisis? I don't have an answer for that, to be honest with you. Like, the problem with the Bitcoin-centric world is there's only 21 million of them. A lot of them have been lost. If we get to a world where Bitcoin is the only meaningful currency, there's going to be so much pain in the world that it's not a world that I probably want to live in. I know that's sad to say, but I think we would be like full Mad Max dystopian future if the dollar died and got to that point. So I wish I had something smart to say or a great answer for something like that, but it's just conjecture, and I don't really know. Someone asked for BQX, so let me pull that up, because everybody knows that I have a super man crush on Voyager. It's my favorite broker. They've been a partner with me since like day one. They're amazing, and it was the only thing that was kind of looking bullish to me on the alt side. So I'm not going to make the same mistake I made last time and forget to share my screen. So let me do that. Boom. So these were the meaningful levels that I had for BQX, which has a different ticker, VYG, Voyager, depending on where you are. But we had this clear blue descending wedge. I've posted this a number of times. And again, I loved this red line. And I shared this in the newsletter. There's a bullish SFP, right? We had this huge move away. Now we don't have the engineered liquidity, but I'm just saying there was definitely buying interest right here, right? This is a swing low, wick below, support, up and break. Now, what's meaningful here to me is that this is like fighting against the tide hard. I mean, alts are bleeding out and dying, and this thing is trying to break out. Could be narrative. Why? I don't know if you guys saw yesterday, but Voyager announced they were giving away $2 million in USDT, or maybe in USDC actually, in a partnership with ex-NBA superstar T-Mac, Tracy McGrady, which is awesome. That guy rules. And, so maybe that's causing some of this bullish action. But again, we're kind of seeing a rejection here at resistance. It's just hard to get super excited about any alt right now. But look, I mean, volume was flat and we're seeing a real volume spike today. It's not huge. It's nothing like these. But, in a vacuum, this chart looks extremely bullish to me. But we're not in a vacuum. We're in an environment where Bitcoin is pushing and it's kind of a scary time to trade alts. But I love the volume increase. I love the breakout. And, I would say that you could have bought here was, like we say, a slight front run of that retest. But like, if you haven't caught it, then maybe, you're looking for this area, right? Give you a little more confirmation, because if you buy here and it dribbles back down to here, you're going to be unhappy. You're going to stop out. If you go here and you see it close. So look, it's so important. Like, people talk about this, but you need to see confirmations. This does not count as what I just drew. This is a wick. You want to see this candle close here, go up a little, and then come back and test as support, right? This is not a resistance break. This is a rejection. So you're only doing a flip when you've actually seen the resistance break, right? So ask them to expedite New York adoption. Man, New York is so difficult for all of these exchanges and brokers. It's just really impossible. I'm going to get going in a moment here, guys. Check out the links in the profile, as I said, for the newsletter. Also, of course, I'm proud to say that Femex sponsors my newsletter. That's the only leverage exchange that I still trade on. I love it. And so, you should definitely check them out if you haven't. It's just an incredible, incredible place to trade. And again, I will be back tomorrow at 2 p.m. doing this and charting altcoin requests and stock requests, any requests that my subscribers have. And I'm really looking forward to that. So now I'm going to figure out how I actually cut this live stream, because I do it super awkwardly every single time. So I'm going to once again share my screen, and I'm going to throw up hopefully my logo-y thing. Once we do that, I am going to sign off. Thank you guys so much for taking the time to talk with me. Really awesome. I love it, man. Peace.